G'day traders, I'm Greg McKenna. Welcome to Markets Morning. It's the 20th of November 2018. Well, the selling came from nowhere. I certainly didn't expect the big fall in Apple and the aggressive response to the Mike Pence President Xi face-off at APEC over the weekend. And to that extent, I got that completely wrong, underestimated. I guess because I've moved on to the fact that the hegemonic battle and the trade battle are related, but they're not fixed together. I didn't appreciate the fact that people would get so exercised by that, and we saw massive falls. The Apple thing is a specific issue. I think the biggest mistake Apple's made is to improve their iOS so much and to make it backwards compatible. Anybody with a 6 has got the latest version of the iOS or close to it, and for all intents and purposes has got a phone that's every bit as good as the XR or the XS or whatever else they're selling. I moved to an XS myself because the other phone that I'd given my son got broken. He needed a new phone. He got my old phone. I got the new phone. But I think that's Apple's issue. But anyway, it's being reflected in unit sales. We're getting reflected in a re-rating of the techs. We got a big fall. 3.26% for the NASDAQ 100 last night is a massive fall, as you can see on that chart I've got on the screen. The S&P 2690 hasn't taken out last week's lows, but fair chance I'm going to look like a feather duster, not a rooster. If we take out last week's lows, the chances of that head and shoulder, pardon me, getting back to 28, 23, 25, get more remote by the minute. We'll have to wait and see. Obviously, Europe had a bad day. Here at home, we got belted yesterday, and then we were down overnight as well. That support level didn't hold. Shot duck does look like it's under pressure again. In terms of currencies, really interesting. Aussie and Kiwi. You know, when we talk about when things go vertical, I get a bit nervous. Looks like they've gone too vertical too quick. People aren't convinced, and then we got the risk off. That's the first time Aussie and Kiwi have gone materially risk off, and it's not really that material, 72.90 something, but still, you know, 40 points off, 0.5%. Since for quite some time. And that's because there's no big fixed income positions that need to run for the exits. But we need to be careful, because if the equity markets take out last week's lows, say the S&P, the NASDAQ already has, but the S&P takes out last week's lows, we're heading back to the lows of last month. And then if last month's lows take it, then we're talking about a whole different thing. We'll talk about that in a sec. But you've got to wait and see. We've got to wait and see how these things play out. Is it going to be turnaround Tuesday, or is it just going to be more weakness? It's Thanksgiving, so who knows? What else? Gold held firm, didn't go up, didn't go down. US dollar was mixed. Swissy did best. Dollar yen up about 0.25%. Aussie and Kiwi lost half, as I said. Euro up about 0.25%. Sterling still waiting on Brexit. Let's dive straight in. Bitcoin, of course, is getting killed. Let's dive straight in here. I'm going to do XRP. I've been requested by a viewer to do Ripple at the end, so I'll switch right at the end. I'll go to Ripple. So what have we got? This is the NASDAQ 100. Remember yesterday I said that a whole host of markets needed the S&P to rally to look good. That didn't happen, obviously. And so now what we've got is that we've got what was, a pretty poor week last week, looking like a very poor day. So 6587 is the key level that we need to watch. If you've got a breakthrough 6587, then the Fibbo projection, particularly given we did get back into this 38.2 to 61.8. Now, mostly with Greg McKenna's first ever system, it was between the 38.2 and the 50%. But sometimes it got all the way back to the 61.8. Now, the Elliott Wave people would tell you why, but I don't know why. But 6151. Now, I've written to myself on the weekend that unless it can get back above 7,000, remembering it was a different outlook for the NASDAQ than the S&P, I've written 6733 must hold, and we're down below that. Below on the weeklies below 7,300, 6367 is in the frame. So 6367 looks to me to be my target, which is the 61.8% of the rally from January 2016 for the NASDAQ. I won't get too bearish. One day's noise is noise, but it does look pretty poor. If this low breaks, then things look ugly. So we've got a 200-point, maybe a 400-point fall coming for the NASDAQ. If we have a look at the S&P 500, That was a neck, that was a shoulder, that was a head. This is still kind of a shoulder, but it's starting to look tenuous, isn't it? If we take out that fractal there, last week's low, which is 2671, remembering this is a futures-based CFD. If we take out that out, particularly if we close below it, then we won't be talking about head and shoulders. We're just going to be talking about a retest to the low, and if that breaks, then we're talking about 2500. So keep an eye on that. You know, you just got to follow the price action, I guess. And it was awful, just like the Australian market was awful. You know, I said yesterday if I think 57.90 couldn't hold, then the Aussie was a shot duck, and that line was actually a little bit higher on the daily. So once it broke the trend line, it ran and it ran and it ran, and there was no support. The banks came under pressure. Royal Commission is on. Not a good look for them. You know, Matt Coleman did a good job for the CBA, but still looks under pressure. And so there we are now. We have a market that looks like it wants to do a full round trip. And a full round trip would be back to 55.85 to 5600. If that broke, then all heck would break loose. So where's the circuit breaker? Now, the circuit breaker was trade. And the circuit maker may be trade if President Trump makes the right noises as we head towards the G20 meeting. But you've got to wonder, don't you? Let's just have a look at the DAX. DAX rolling over too. You know, it's one of the things. They all look under pressure unless the S&P can save them. If the S&P is going to fall, then global stock markets are under pressure again. So we just need to keep an eye on this. Nothing's overdone. The stochastics aren't overdone. The RSI is not overdone there. You know, all we've got is just a roll. We've just got this medium-term downtrend. Oh, one thing, if that's on the dailies, obviously, if we have a look at the NASDAQ. If I turn it into a weekly, blow it up. Hasn't crossed yet, but that's the Jimmy R. The last time the Jimmy R crossed was back here. So it's a pretty good, it's not my indicator, it's Jimmy Rohrbuch's. That's why I call it Jimmy R. It's his indicator. So that would suggest to you that if we get a new low taken out, those moving averages will cross and the whole outlook will change. There's a lot of people talking about that. Let's do currencies now. The euro. So 114.40 I think is the level I talked about last week, which was the first target. We've got that now. So that's our garden variety. So the US dollar reversal could be finished. You know, that's just the garden variety where we normally roll back to. But to the extent that we're above the 15 and we're above the 30-day moving, 30-period EMAs, we're looking at the daily, so they are daily moving averages. To the extent that we're through that, then there is this chance that we get into the 115.14 to 115.85 kind of zone. We'll have to wait and see. You know, the housing data last night, or the NAHB Housing Optimism Index was pretty poor, 60. Last one was 67. And so the market wants to believe that the weak spot in the American economy is housing, and that because of that weak spot in housing, there'll be less, you know, consumer durables bought. And the market wants to believe that this is a precursor to the slowdown that's coming. And why is this important? Remember what I said about how David Rosenberg explained the difference between an economist and a strategist? So what we've got, or what we had, was we had a market that believed these kind of things, yet the Fed just kept saying resolutely, she'll be right, we're going in this direction, and this direction is higher rates. And it's only in the last couple of days, or last week, when the Fed has introduced this element of uncertainty. And have a look at the written version of Markets Morning. I can't remember the direct quote, I'm very sorry. That John Williams said, rates are going up, gradual, none of that's new. But what he did say is for now. Now, if you want to read everything the Fed says as dovish, then you pick up on words like for now. So I guess the key thing is that US bonds haven't rallied yet. But building housing data's out tonight. Keep an eye on that. If that's weak, we could see this up. But again, I hate markets that go vertical. I just don't trust them. In the same way that with oil, you know, I kind of got off the short oil train too early, missed out on that 7% move, right? Because it was the opposite. But I guess also a full round trip for this is 114.99. So let's see how it looks at 115. and then we'll have a look. But, you know, you can draw two trend lines there. You can draw that trend line there, and then you can take it up more steeply. If it comes down through 114.30, then it can probably fall a bit further, and then we can have another look at it. In terms of dollar yen, reversing, pardon me, it looks like it wants to go lower. I could draw a trend line through there. It does look like it wants to go lower. So my sense is that if 112.55 is gone. So now we're looking down towards 111.37 or something like that, which I think has been something I've been saying for a while, sort of the 110.50, 111.50 region. Pardon me, in terms of sterling, as I said yesterday, sterling's just in a range, you know, toing and froing with the ebb and flow. Mrs. May is actually doing a pretty good job, I think. As I said yesterday, she can't please anybody because she's trying to upset nobody. And of course, with the Irish backstop there as an issue, and it must be, obviously, then, you know, that kind of makes it all kind of more fractious. But the spill may still come. She may still not be Prime Minister by the end of the week or the end of next week. But each day's delay suggests that the plotters, the usurpers, if you want to call them that, are having a more difficult time, which then suggests to me that the chances of Brexit getting passed actually increase. But we'll know. Who knows? I'm not going to pretend to be an expert. I'm a reasonable expert on humans, even though I don't like many of them. I'm only joking. But not British politics. Right, we've got an inside day. What does that inside day tell us? It tells us nothing. It tells us that the market did not want to go on with Friday's close. It tells us that if I look at a 4-hour chart, it looks too steep. Right? So it's now sitting. So if we go down through, on the day, if we go down through 72.68, then we can go lower. But of course, we've got the RBA out today. What will the minutes say? They're going to be relatively hawkish, I would have thought. But we'll have to wait and see. But you can see there. So I was looking to buy some last night. I had an order in at 76, didn't get filled. That low there was 76.8. So, and remembering this is the bid. So I didn't get filled on my order. So I'm not chasing it now. The MACD suggests it's coming down. It does look like it'll probably head towards 72.70 or thereabouts. I'll see how it looks. We may even need to see it back towards sort of 72.25, 30, 40 before it can get some support again. The issue with the Aussie is if stocks continue to bail, then the battler's going to be under a little bit of pressure. There is not a lot of liquidation to be done. There's zero, almost, liquidation to be done relative to the size of short liquidation if it can hold above 73 cents at some point this week, and that will depend on the US dollar. So it's quite a... I think I said yesterday that I wrote at the end of my note here that it felt like an uncomfortable period of transition. It's very fractious at the moment. So I'm not holding any view strongly. Indeed, I'm not actually trading unless I see something that I really, really like. CAD. Sorry, I can't find my CAD. There it is. So, similar, draw a trend line here. The dollar CAD was up a little bit last night, so the CAD lost ground along with the Aussie. The Aussie and Kiwi lost about 0.6. The CAD lost about 0.2, I think. But you can see overall that we're still heading lower. It needs to hold above 131.20, dollar CAD, to have any chance of rallying again. If it breaks that, then I see a downside. A dollar Sing, check this out. With all the kerfuffle last night, with stocks getting absolutely belted, dollar Sing went down. Now, this is my health check on US dollar moves, as I always say. So that's still an ominous sign for the greenback. Now, I forgot to talk about yesterday CNH. Essentially what we've got is we've got this little uptrend here, which actually goes back to there. And we've got the Chinese keeping a lid on it. So keep an eye on that. While ever the Chinese keep a lid on it, it's no surprise to me that dollar yuan went up yesterday and the Aussie dollar came down. So keep an eye on that. In terms of the Kiwi, it went vertical. Stuff that goes vertical, I don't like. All right, so tick, tick, tick. This is the 4 hours. You can see it's broken. Right, so now it's a question of where it's going to pull back to. And my sense is it's at 68.38, so it's back below 68.5. This zone here 67.94 looks like support. If it doesn't hold 67.94, 67.5 is where it would possibly fall back to before it finds support. There is some wood to chop before Aussie and Kiwi can get to the next level. Moving to gold now. 15 minutes, I'll get my skates on. Still got an uptrend, although it's not a strong one. We've bounced off support. We're struggling at the moment. Didn't get a lift from last night's funkiness in stocks, which is a tell. A troubling tell if you're a bull, but we'll keep an eye on that. Don't have a dog in that fight at the moment. In terms of silver, which I forgot to talk about yesterday, it's bounced nicely off the lows. It's actually doing a little bit better. If it can get up and through 14, sort of 45, it can have a bit of a run. Copper at 279.25, I think. 279.70. So still in this range. Bounced off support in this little wedgie pattern here. More likely than not to find resistance between 283 and 286. If it does, then we'll know it's probably going to reverse lower. Keep an eye on that in terms of what it means for the Aussie and other risk assets. So we had a wild day yesterday, but you can see here that from a MACD point of view, from a stochastics and an RSI point of view, the chance, while last week's lows hold, remembering what I always say, when you've got a big move like this, sometimes the first MACD signal is wrong. Now, on my, I know I'm showing you my head. On my screener over here, I'll have an order to buy crude WTI tomorrow, and I still don't have an order to buy Brent yet. So, steering clear of those without the order. We'll see how it goes. But there's still a chance, as long as it holds above last week's lows, there's still a chance of at least a move to the bottom of this sort of 69.50 to 70 region in Brent terms. In WTI terms, so what do we have? We were up 1% yesterday in Asia, then we were down 1% last night. That's hanging. We have actually, so as I say, if we stay where we are now, then technically the MACD gives me the order, and then we get this this run towards 58.5. That they've all moved. I don't know what's gone on here. Sorry about that. They've even moved since this morning when I drew them. Let's just get rid of him. Well, let's get rid of both of them then. You know, you've got a couple of trend lines there. You've got that one. Then you've got a steeper one, obviously, which is there. And basically, if you can get up through sort of 58, 58.5, you can have a bit of a run for WTI. As I say, if it can hold up, I'll get an order on the MACD system that I've got to buy. Now, finishing off now, I'll just quickly look at Bitcoin. It's in shot duck territory at the moment. It's fallen completely out of bed 2 days in a row. Lost 11% or something. It's 5,787. That's just a spread, $50 on a spread. Weekly, remember what I said? You know, we're looking down here. So 3,471 is the figure on the dailies from the projection. If I move that down to there, which I'll do for you. So, well, that says 3.6, but I'm going to say, let's just say 3.4 to 3.6. It doesn't really matter now, does it? And then below that, you got 3,000, which has been my long-held sort of halving target after 6,000. And then, of course, as we discussed yesterday, I've got... now, I may have got rid of my... No, there it is. Yeah, so anyway, so what do we got? We've got the RBA today. I'm just going to bring up XRP so I can quickly look. I haven't looked at an XRP chart in ages. So RBA today, German, having a mental blank, German data out tonight. Let me just see. Producer prices, I think. We've got a GDP. What am I talking? No, that's later on this week. Yeah, I think it's producer prices in Germany. We've got a Euro group meeting, which will keep things busy. Now, here's just quickly for the XRP people. Got nothing there. Let's have a look at it on the weeklies. Oops. Actually doesn't have any data there. So basically what I'd say, just looking at that chart, it's got no fractals or anything else on it. That's the daily. Is it up to date? Is that today's date? Yeah, it's the 20th. My sense would be on XRP, if it breaks 40.86 and it's going to head, substantially lower, you'd probably say that was a a big trigger for a run back into the 20s. Remember, we had the 20s and then it rallied and then we've come off. I used to do this every week, and you can see how the little trend lines and then the breaks and then the little trend lines and then the breaks, and that's essentially what you've got here too. So that's what I'd be watching. I'd be watching that, and I'd be watching... Oh, I don't like that one. That looks fake. It might be real. Oh, there was a ramp, wasn't there? I'll just take these two anyway. So you got 53 on the top side and 41 on the bottom side. Anyway, I hope that helps. Not a big day, but we do have Governor Lowe speaking tonight. We do have Governor Carney speaking tonight, and we do have Jens Wiedemann talking tonight. So let's keep an eye on central bankers again, and let's keep an eye on last week's low in the S&P. If that gives way, then we're going back to the October low, it looks like. That gives way, that screws up my Aussie bullish, screws up my Kiwi to 70 for the moment. We'll just have to keep an eye on how things go. But there's nowhere to hide in markets at the moment. Feels like just a fear trade. Nobody really wants to punt anything. I've gone 21 minutes. I am sorry. Catch you tomorrow.